The British Prime Minister, Mr. Rishi Sunak, says like-minded governments and artificial intelligence companies had reached an agreement on testing new AI models before they are released. The Prime Minister said this in the two-day AI Safety Summit in UK, where he secured China's backing for an international effort to manage the risk of the technology. Mr. Sunak announced a further landmark agreement with like-minded governments and AI companies.
I believe the achievements of this summit will tip the balance in favor of humanity, because they show that we have both the political will and the capability to control this technology and secure its benefits for the long term. We analyze the latest available evidence on everything from social harms like bias and misinformation to the risk of misuse by bad actors, through to the most extreme risks of even losing control of AI completely. And yesterday, we agreed and published the first ever international statement about the nature of all those risks. It was signed by every single nation represented at this summit, covering all continents across the globe, and including the United States and China. Some said we shouldn't even invite China. Others said that we could never get an agreement with them. Both were wrong. A serious strategy for AI safety has to begin with engaging all the world's leading AI powers, and all of them have signed the Bletchley Park Communique.
Stocks were headed for their biggest weekly rise in a year today, while bonds rallied and the dollar was on the back foot as investors cheered a pause in U.S. interest rate hikes. Cash treasuries were untraded. In Asia's markets were closed in Tokyo due to a holiday, and 10-year futures had recent gains to imply. Yields were steady at 4.67%. MSCI's broadest index of Asian Pacific shares outside of Japan rose 0.9%. S&P 500 were 0.1% lower, weighed by 3% fall of Apple shares in post-market trade after the tech giant sales forecast fell short of expectations. World stocks are 4.2% for the week so far, their largest weekly rise since November 2022. The latest World Oil Outlook 2023 by the Organization of Petroleum Exporting Countries reveals that global energy demand will soar 23% by 2045, requiring 3 million more barrels of crude oil per day every year. To achieve this, the sector's investment is expected to hit a total of $14 trillion from now until 2045, an equivalent of $610 billion on average per year. Of the total investments needed, the $11.1 trillion is expected to be required in the upstream sector annually, while downstream, midstream requires $1.7 and $1.2 trillion respectively. Secretary General of OPEC, Mr. Hamad Al-Ghatiz, says recent developments have led the OPEC team to reassess what each energy can deliver, with a focus on pragmatic and realistic options and solutions. Crude oil prices were little changed today, but headed for a second week of losses as supply concerns driven by conflicts in the Middle East eased, while the demand outlook for the world's top crude importer, China, remained uncertain. U.S. West Texas Intermediate crude rose to sell at $82.87, with an upsurge of 0.50%. Brent also experienced an upward price margin of 0.37% to sell at $87.17. Bonny Light recorded a downward price review of 0.19% to sell at $88.02 per barrel, and 40 OPEC basket crude dealers are offering $88.56, with a downward price review of 2.79%.